Tony, when I think about Cyprus, Cyprus is so well known for their copper deposits. How strong is that, and can it really defend Cyprus from this ravaging of deleveraging they're going through?
Well, it's true. For 2,000 years now, Cyprus has been famous for its extracting deposits, but of course that's for its copper deposits. It's known as Copper Island. It doesn't seem to have enough copper to create a shield strong enough to protect itself from the deleveraging process, which of course is ravaging, as you say. I mean, there are many lessons to be learned from what's happened in Cyprus, and of course it is small, about 1.1 million residents for New Yorkers compared to Brooklyn, 2.5 million. That seems rather small, but look at the poor crisis management skills that Europe, generally speaking, has shown, and look at how it's snubbing its nose to the lessons of history. Let's look at two examples in 100 years. Go back to October 24th, 1907, when J.P. Morgan stood at the corner of Broad Street and Wall Street, when it looked like 50 brokerage firms might go under because of a panic in banking. He got together a number of banks and said to the head of the New York Stock Exchange, which wanted to close at the time, that it shouldn't close even a minute before it was scheduled to close at 3 o'clock, that he would get together enough money by the bankers that did have money to help instill confidence. And so instead of instilling confidence, though, of course, the Europeans are looking to do something different than Angela Merkel tried to do and did do in 2008. It marked a turning point in October 2008 when it looked like there was fear of the banking system then, and money was starting to flow out of banks. She said that we assure depositors that their deposits are secure, and it marked a turning point there. So again, rather than instilling confidence, it seems that they're injecting anxiety into the system, the Europeans, and they're not taking lessons out of history, and they're making for a different story here that Bill Gross this morning tweeted and said it's sort of an Orwellian vision of sovereign risk. And so the Europeans need to get their acts together, so to speak, to calm depositors' fears and investor fears globally.
Tony, I'd like to ask you to channel, if you would, your boss, Bill Gross. Bill has written very passionately about the impact of financial repression, like being, a frog being boiled alive, living with negative real interest rates, the penalty on savers. Is it not possible that within that vision, the theft of wealth, essentially what's going on in Cyprus, is better than this invisible strangulation of negative real interest rates?
That is a tough call. We are in the midst of the transformation of a century. For decades, policymakers at the fiscal level, of course, have been creating larger and larger programs and easing rules, etc., keeping taxes low, too low relative to spending, and the burdens of the many generations that have spent the money of future generations, which is today's generation, of course, is borne on the back of today's generation, and it's difficult. And so what you see then is austerity fatigue. You see that in the vote in Italy, of course, recently, which could, by the way, gain momentum. This austerity fatigue, the votes against austerity could increase as those who oppose austerity use Cyprus as an example of what could happen if policymakers who want to impose austerity are put into power. But at the same time, of course, there's fatigue by those who are bailing out nations. And so Germany, which has an election in September, Angela Merkel, worries that, well, taxpayers will say, well, why should we be bailing out those in Cyprus, especially if some of the money there is from oligarchs in Russia, and why should taxpayer money be used for that? So it's a very difficult decision. Again, it's built up over many generations, in fact, and today's generation is being asked to burden this. And just to take it back to the U.S. really quick, the United States, the U.S., based on the OASDI, the Old Age Survivors and Disability Insurance Trustees, they said that there's $86.5 trillion of future liabilities for the United States because of Medicare and Social Security. The U.S. hasn't put itself on a path to fix its problems in terms of debt. And so look at all that we have to do, a lot of wood to chop still here.
What about the U.S. as a safe haven in lieu of what's happening in Cyprus? Yesterday, many thought we would see U.S. banks rally as investors didn't just feel comfortable with Cyprus. They didn't really feel comfortable with the European banking system at all, yet we didn't see much happen here in terms of performance for U.S. banks. Do you think we're going to see an uptick, or investors really just want to put their money on the sidelines until they see how this whole bailout plays out?
Well, the U.S. banking system does look a lot better than Europe's. The U.S. banking system is roughly the same size as GDP. In Europe, it's 3 times the size. One of the biggest fears we would have is an acceleration in global bank deleveraging. We live in a system called a fractional reserve system. Of course, the banks can take dollars and euros and yen and basically make much more loans and leverage the system about 8 to 10 to 1. And when it unwinds, it's very ravaging. So when you go, for example, to pay off a loan, if you go to a teller's window and pay off a loan, and if that loan is not replaced by another loan, that dollar or yen or euro disappears from the system for good. It extinguishes money supply. That causes deflation. It makes it difficult for businesses to stay in business because they can't keep prices high enough relative to their costs. They lay off workers and employment declines. That's how you get depressions. And so it's a very precarious system, but the U.S. Is the safest of them in terms of the banking sector. But we are in a system, this fractional reserve system, that is almost constantly at risk in various means to excess leverage. And hopefully it's a beautiful deleveraging rather than the ugly one that some nations